Here, along with everything I laid out about unknown conditions of the well and the infrastructure, the mobile home and the infrastructure, there's almost nothing on market out there. I mean, there's very, very little, very few solds, and I was making an assumption about.
What's up, everybody? Mason McDonald and Dan Haberkost with another episode of the Big Picture Blueprint. And today we are doing an episode where I get the privilege of interviewing Dan and giving him the opportunity to dissect deep into a deal that he recently did where he is going to make over $50,000 on this one individual deal. But before we get into the deal dissection, Dan, how are you doing?
Pretty good. It's busy right now. Tons of buying and selling. It's definitely picked up this summer.
Yeah, no, I feel that. On the agent side of things, I've got 6 contracts this week.
Wow.
Which is adding up. I think hiring full-time administrative support to help me out with that, going back to one of our recent episodes of I'm really starting to take my own advice, and it's paying off. But I think this type of deal kind of illustrates what you and I are really trying to achieve in our business and do it over and over and over again, ideally from one singular project as versus one-off deals. But I think this is a perfect template and a perfect example of, in my mind, almost the perfect land deal. So let's start out with what was the deal? What was the property? Tell us about the property. You don't have to tell us exactly where it's at, but maybe the outskirts of what market it's in.
Yeah, so 40 acres, commutable to Front Range cities in Colorado, little rural, but not too far. And the property had an old, call it abandoned mobile home that had just been sitting there for years. No one had been in it. No one touched it. Condition unknown, a well, septic, and electric attached to the mobile home. And it was true of all the utilities of we didn't know the condition of the well or the septic or the transformer. But just a rural piece of land with an old manufactured home, essentially.
Okay, sweet. And we'll get into kind of all of the due diligence associated with how you even determined whether or not it was worth it to buy and what type of research you did that you're glad you did, and potentially some stuff that maybe you should have done that you didn't do if that ends up coming up too. But where did the lead come from? Tell us about the seller, how they came into your organization.
Yep. So it was an inbound lead. They actually texted initially, and it was from a mail campaign. So the same way I've been getting land deals since I started this years ago. And I think just to pull some lessons out of that, what was so important is I took the time several months ago to totally revamp all of our marketing. I really branded everything. I, at the same time, redid a lot of our online branding where everything matches up, from Better Business Bureau to Google business profile to Facebook, posting on our Front Range Land Facebook. And so when someone Googles us, they see tons of good reviews. They see us building houses. They see the same phone number everywhere, the same logo. And so the combination of redoing our physical mail and then having a really solid online presence, so when people get that mail and look us up, everything's kind of aligned and copacetic, and there's evidence from reviews. That has really substantially increased the return we're getting from mail this year, and this lead is an example of that.
That's fantastic. And shoot, if you want to, show people the mailer, do it. But for those of you guys watching on YouTube, we did the same thing of here's a postcard that we sent out, good, clean, professional branding. The land looks like the land that for the type of business that we're doing. It's got my face on it. It's also targeting people that I know this is inverted, but it says tired of lowball offers on your land. That's for my agent business. And we've gotten a really, really solid response from that. And
Yep.
I think whenever I look at the quality of mailers that we've typically seen in this business, Dan, yours definitely stand out. I think mine stand out compared to our competition. And I think that really, really helps. A question for you is, obviously, between this podcast with over 100 episodes and having been interviewed probably on at least as many or around the same amount of episodes, your name is out there as an investor that is making a lot of money on land and buying at a discount. Has that ever come up into the conversation ever when you're working with sellers and people Google Front Range Land and they look up Dan Haberkost and they see, oh, he's a land investor? Is that something that's ever happened? And if not, is that a concern of yours, or does that not even matter?
Absolutely. It's helped build credibility. It's pretty funny. I remember a deal we did last year. It was an assignment, and I remember it because we don't do many assignments. We generally close almost everything. I've probably done a dozen, maybe 2 dozen assignments ever. And the guy said, "Oh," because he was talking to one of my acquisition guys. I saw Dan's YouTube video about land deals in Florida or something like that, really specific. He goes, "Oh, that's pretty cool." And again, I'm communicating this. This is what through my acquisition manager. So we're playing a bit of telephone. But I mean, I guess I have no idea if people haven't called because they did that and saw videos. But from everything I've heard, I've only heard good things because that's not the only person or lead that has said that to us. It just has built credibility. We're actually in business. And before I pause, one more thing I want to say. It's because these people calling us understand that we're investors and we're going to make money on the deal one way or another. And they're not offended by that. I mean, they just want to get rid of the property. If they wanted highest and best, they'd call a realtor, and they know that.
Yeah. And I think that's something that is important to remember of it. It's okay to put content out there if you're actually doing business. I think where I hesitate a little bit more for a lot of people that are attempting to start putting content out there is the idea of fake it before you make it. We talked about that once again in our one of our recent episodes. And I think that if you're not actually doing deals, don't pretend like you are, because one conversation with you will show the evidence that you haven't done deals. And then everything that you say beyond that comes across as disingenuous. So, whenever you start doing deals, post about it, tell people about it, show what you have going on. I think that can definitely increase your legitimacy. So, whenever you got this inbound lead, what did those conversations initially look like? They responded to a mailer, but what did that first conversation look like as your sales manager was gathering evidence for the underwriting process?
Sure. So doing a lot of business in one area helps because this is actually right down the street on the same road from another parcel that we have. So we knew a lot about the location. Our agent had driven down there. I had actually driven close by. So we knew the area pretty well. And she understood that this is an old manufactured home, condition unknown. We were assuming that we were going to have to either take a discount because of it or have it hauled off the property for a cost. We figured the well would add a lot of value, but again, we didn't have the luxury of doing a test because she was more of, look, if I'm going to sell this to you, buy it for me quickly. I don't want a huge protracted due diligence timeline where you're going to test everything and inspect everything. And so our way of thinking about it was, what can we buy this at where there's no way to lose? Much like you were talking about your Alaska deal where there's no way you're going to lose on that, but how much upside is there is unknown. That's how we felt about this one, where we hadn't got to inspect the inside of the mobile home. We didn't know the condition of the well, but shoot, it's 40 acres. 40 acres alone will sell probably 50 to 60 if there's access and power. For sure, there's more value than that because there's a well and septic and electric. And so I'm reading through my acquisition manager's notes, and I don't know where she was at initially, but acquisition manager offered 35 to start, just to see. And I know they went back and forth a bit and ended up settling at 38. And so we got it at, or 37, excuse me. And we ended up getting it at 37,000 a few days later.
Perfect. Well, and let's dive into the due diligence a little bit, where there's certain things that are public record in Colorado. Of you can research the well permit number and make sure it's a permitted well. You can typically find out some sort of information about the septic system. I don't know if it's as easy in the county that you were doing business with, but what research actually went into the property, since she was so much like sight unseen, condition unknown. But I know you didn't just say, oh, I believe you that there's a well and septic system and everything like that on the property. So how did you guys kind of go about researching that?
Yeah, we had our realtor drive by. We had he looked up the well permit, so we saw that was real, that was permitted. Talked to the power company. We saw, okay, so there's a transformer. Power was actually on still. I had just gotten quotes. It was funny enough for the cost to extend power, put in a transformer, and that was thousands of dollars of value. I want to say like just running the wire plus the transformer was like $7 or $8 for a lot of these properties.
Yeah,
Um,
that's right on.
and then my realtor got the trailer keys, went inside the trailer, and it was rough, but it wasn't like, holes in the roof and falling apart rough. So we thought, okay, someone could probably at least use this for storage. It's not a massive detractor. And then he saw that the septic was in fact there, but we didn't get any sort of test done because we got it at such a low cost. So at that point, we thought, okay, there's definitely a decent upside there. I was in my head still thinking, probably 60s, maybe 70 potentially. But the realtor was pretty optimistic, and he goes, "Hey, if this well tests or potable, I guess would be what I'm looking for, and somebody does want to use this trailer, you could probably get like 80 or 90 for this thing." And I go, "Oh, okay, great." And so once we verified all that, I knew that we were buying it below the basis it would take to replicate it. So to get 40 acres, put in a well, even if the well, let's forget about the well. Let's just say we tested the well and it turned back that it was, infected with bacteria or had gone dry or something was wrong with it. And let's just say it's just the transformer, electric run to the building site, septic, or already below replacement cost quite a bit. And so that, in my mind, is a no way to lose scenario. It's just we didn't know how much the upside was, but that was the point at which we felt comfortable closing. And one more thing that I failed to look at, thankfully the realtor remembered, is the VIN. And people, myself, may have forgotten, oh, this is a manufactured home. It doesn't convey with the property unless you have the title signed. Now, thankfully, turned out it had been purged to the property. And so the mobile home was no longer a mobile home. It did come with the land. However, make sure you check that, because if you buy a piece of land and you didn't get the title signed over, just like a car for the mobile home, then that could cause you a problem where you don't own that home yet. So one thing to look out for.
Yeah, it's that's really good advice. I've bought land with old mobile homes on it where title was not conveyed with the property, and we just disclosed that whenever we were selling, because we were selling at such a discount. And because there's a way to go about it of resolving the title issues on a mobile home. It's the same thing with a car, where you can kind of go through the county sheriff's office and do all this stuff. And I don't know, I haven't done it myself, but like there is a way to get it done. And there's also a way where tons of people make a tremendous amount of money doing this, where they say, title issues on your mobile home, we don't care. We'll come haul it off your land and we'll go resolve that, ourselves. But just the fact that you were able to kind of analyze the deal and say, hey, here's what raw land is selling for in the area. Here's what, potentially improved land selling for. If you can find any similar comps that have that level of infrastructure, and you can get a decent idea of, okay, here's what we're actually going to be able to move it at. Worst case scenario, in your mind, you're like, I'll at least get my money back. But realistically with this, what did you anticipate your worst case scenario being? Say the well, didn't have potable water, and say that, I don't know, septic system wasn't great, the mobile home wasn't great. Like, in your mind, what was the worst case scenario with this deal?
Yeah, in my mind, it was a normal 40-acre parcel minus the cost to remove the mobile home, because there's enough space where people don't really care if there's an old covered well and an old covered septic, right? It's not like all that would have to be ripped out. But the worst case is that those were worthless. The mobile home was a detractor, and it would sell for less than what a normal 40-acre parcel would sell for, in my mind. And so I thought there was a chance that, hey, this thing only sells for like 45 or 50, because it's a pain in the butt that there's a trashed mobile home. But of course, that's not how it worked out.
And that's something to really consider whenever you're underwriting a deal, is coming up with the worst case scenario and being realistic with it. You don't want to be like, okay, well, worst case scenario is I sell it for way less than I bought it for. Like, yeah, that's a potential if you have to move it really, really, really quickly and you don't have the ability to hold it for a while. But if you're looking at improvement costs and replacement costs, I think that it's really hard to lose on it. And Dan, you mentioned my Alaska deal that I'm buying at such a substantial discount that worst case scenario is all the equipment that comes with it, which is pretty easy to kind of move. I could sell for more than what I'm paying, and I don't think that's going to happen. But I think it's just the type of bets that we're working on making in this business are more so where there really isn't downside. But you got it for just over 37,000 after closing costs and everything. How'd you pay for it? Was this all your own money?
No, this one I used an investor for, and they just put up the money, and then they had a sliding scale of return depending on how long it ended up sitting.
Perfect. And you don't have to tell us who that investor is, but how did you meet someone that was willing to invest in a weird mobile home park deal in Colorado, without them seeing it or touching it or anything?
So at this point, I have found that the people that invest with me, it has nothing to do with the deal. It has everything to do with the relationship and their trust in me. And I initially met this person through another friend, and both of them were just friends first before they started investing. But they're in a totally different segment of real estate. Got to know each other over a few years, saw me consistently doing deals, and put up money on a couple, and things went as I told them it would. And so they want to keep investing. And so, yeah, I don't think he ever asked me where it's at or really anything. And that's been my experience where I have not had people that have invested with me because of the deal. It's been entirely because of the relationships.
And I think that's something really, really important to remember is it takes a while to cultivate these relationships, but the vast amount of time dedicated was you building your business over the last handful of years to become, beyond being just a decent person, but come across as a legitimate person, legitimate business person, and an expert in what you're doing, where you feel comfortable taking on someone else's money, because there's always risk in lending. No matter how clear cut the deal is, we've had deals that we thought were super clear cut, and they weren't. This one ended up being a pretty solid one, but it takes time to develop that network. You need to meet them in the right places. Where did you meet the initial contact?
The initial contact was referred to me by a former employee when we, he knew that the initial contact might want to fund deals. We got to know each other 3 years ago and then started hanging out a bit, and over the years have gotten to know each other decently well. Then he funded a couple deals, and then he introduced me to his friend, and then the friend funded this one. And it has gone on like a daisy chain like that, where people have introduced me to their friends, and then their friends introduced me to their friends, and it just kind of keeps on going. But it's been all relationships, really.
Yeah. And people talk about building a referral-based business, building a referral-based network, and, friendship network too. It makes it easier because you have that kind of social equity going in, being referred by someone else. But let's talk about, everything kind of checked out. You put it on the market. How quickly did it take for you to start getting offers? When did the buyer leads start flowing in?
Sure. So this was a whole nother aspect of uncertainty, because here, along with everything I laid out about unknown conditions of the well and the the mobile home and the infrastructure, there's almost nothing on market out there. I mean, there's very, very little, very few solds, and I was making an assumption about demand. And I thought there was a lot of people that wanted to buy out there. And thankfully, that turned out to be correct. And we got a tremendous amount of inquiries right away. And we ended up getting an offer, a full price cash offer in, 7 or 10 days. And so that was pretty exciting. So we went under contract to sell at $90,000.
But you had one buyer back out on this deal though, right?
Yes. And it was that buyer. So it was strange. The listing and my realtor really clearly communicated, hey, this is an old mobile home. We don't know its condition. We don't know if the roof leaks. It didn't look like it when we were there, but maybe it does. And they tested the well. The well test ended up being fine, so we were lucky there. They didn't test the septic, which was interesting. That wasn't in their due diligence, but they walked through the manufactured home. They did their well tests. We thought we were good. And they even texted my realtor saying, hey, we're going to send the removal of the inspection contingency. I forget what the official word for that is, but I thought, great. All right, we're closing. And then later that day, they go, actually, hold on, we're not sure. Oh, okay. And then turns out the realtor goes, oh, well, they decided they don't want to put money to rehab the manufactured home, so we're going to back out. Like, but you knew this was a distressed manufactured home. We told you that from day one. So whatever, they backed out. We put it back on the market.
That's so weird. And I think and we'll get into how it worked out and everything like that too. But I feel like just the best advice that I hear often is never fall in love with a deal, never fall in love with a buyer or the expectation or anything like that. Because, man, I've gotten plenty of offers on land that the deal never materialized. And if you get too emotional about it, it just becomes disruptive to everything else that you have in your life, where you're like, this went under contract so quickly. This is awesome. And then say you don't get an offer right whenever you put it back on the market. It takes months or years. And you're just thinking about it and waiting. I think that's just a mindset challenge that you have to overcome. But anyways, this buyer backed out for whatever reason, decided they couldn't take the project on. Did they pay for that well inspection?
They did. So that was nice that we had that. And
so that's like $700 right there.
Yeah, exactly. I had to transfer power into my name and then let them hook up to the power to do the inspection. But yeah, so that was a little bit of a value add there. So we put it back on the market. And again, my realtor starts fielding phone calls. But what he had told me from the beginning is, hey, there's a lot of interested people out here, but few people have cash. And even the buyer that backed out illustrated that a bit, because I remember looking at their proof of funds. And then the reason they backed out being not wanting to do the rehab, well, they had barely more than $90,000. So that was going to be stretching them thin, it looked like, as is. And so he's like, we might have to sell this on terms or sell it substantially lower, which is just a whole nother factor of rural land, is there's just less people with money, right? And so after a few weeks go by, he hadn't gotten it sold, and I had it posted on Facebook. And at this point we'd agreed, hey, if we can get solid 40-50% down payment, I'll finance the rest. And even though he had it listed on market, a Facebook buyer ended up wanting to buy it. And this guy, I just had him call me directly. We hashed out the details. We agreed on terms, so he didn't try and negotiate the price. And he wanted to buy it at $90K, $40K down, $50K as a note at 10% interest over 5 years. And he disappeared for a week or two, and we thought, oh, okay, just another person wasting our time. But then he got back to my realtor. He said, all right, I'm ready to go. He signed the contract. We went into escrow. We closed as quickly as the attorney was able to, or the title company.
That's awesome. And with that, you marketed it. You brought the buyer to the table. I mean, this is part of why I became an agent, is because I got tired doing that and then paying someone else to do it. Did your realtor come down in commission? Did they transaction broker it? How did that structure work out?
Yeah, I was pleased to see it was a 3.5% commission I paid. So he met this guy out there. He met his friend out there who wanted to do the inspection for him. So he did a good amount of work. He did quite a bit of work with other buyers. He helped give me the confidence to buy the deal. And so he did a lot of work. So I thought that was perfectly fair. I would not have been okay with him trying to take 6% though.
Yeah, no, I totally get that. Have paid much more than that on transaction broker deals before on smaller land deals. And it adds up. So that's great that your realtor was willing to negotiate. But you found a buyer. Marketing it yourself is always crucial. I think sometimes, and Dan and I talk about it, the most important function in the business is sales. I don't think either of us will ever fully outsource the sales component of our jobs, even when we're in our 70s and 80s, because there's an enjoyment aspect of it, but two, it's just the lifeblood of your business. So even if you have a realtor working your deal, post it on Facebook Marketplace, tell your friends and family about it, post it on social media. There's so many buyers that are on social media now, and that trend will continue throughout the years. But you got a great deal. What did that, because you had a lender on it, and doing the math, I mean, 40 grand down plus your buy side of 37, 37.4. If you're, paying off your sales manager, paying off everyone, you're going to have to come out of pocket at the closing table, basically. to make this deal happen. So let's walk through the financials of it.
Yep. So all in on the buy side, it was 37,480 that we wired. Sales price of 90, but 50K down, or excuse me, 50K note, 40K down. Sales proceeds after calling or paying the realtor. The reissue on title insurance was very cheap because I paid for a hold open. If you're in Colorado, absolutely get a hold open policy. It'll save you when you resell it. And so coming out of the sales HUD was 35,716 plus a $50,000 note. Now, to Mason's point, I had to pay off the lender, the initial 37,480. I had to pay him a fee, which was $2,280 because it sold very quickly. And then I had to pay my sales manager. And my sales manager, he makes a solid commission, and he was actually in bonus for this month because he closed a lot. So I paid him $6,247. And so I was out of pocket $10,291 to sell this deal, which probably doesn't sound super appealing, but I have a $50,000 note at 10% interest with $40,000 down. So it's very secure. Now, for people out there who don't have any money and say, well, I can't do this, you still can. You have to line it up right. But there are note buyers. I've already gotten quotes. One who would buy the note at $43,500 and one that would buy it at $42,000 or $42,500. And so if I needed to, if I was struggling, I could sell the note, get $43,500 out, which would leave me with 33,200 in profit right away. So there are options when you do good deals.
Well, and for the person that scoffs at having to have any of your own money in a deal, one, my guess is you're not actually doing any deals.
Yeah.
I'm just going to call bullshit on it, because then you had $10,291 at a 10% interest note on 50K over
5 years.
What was it? 5 years. You're getting $1,062.35. Your payback period is 9.7 months. So in under 10 months, you get all of your money back, and then you're just making $1,000 a month. And so I remember whenever I was getting psyched about the idea of the 1% rule, bigger pockets have a rental property that cash flows $200 a month or something like that. And you're going to get $1,000 a month for, 4 years and 2 months. There's not the tax benefits of rental properties. Who cares? Blah, blah, blah. But $1,000 a month, that's, almost 2,000 mailers. That's a partial employee salary. That's, for you, that's probably like 10 months of eating, because I think you only eat from Walmart, rice and, ground beef or something like that. But I think the fact that you can look at the return on this and you're, 5Xing your money over a 5-year period of time is a fantastic deal. So, I mean, just with interest, the $50,000 note, you're going to get a total of $63,741 in payments and $13,741 in interest. They might pay it off early. Who cares? But the thing is, regardless of what your total profit is, you're 5Xing your money on this deal, even if they paid off early, and then you go put it into another deal like this.
Yeah.
That's awesome. So let's try and, break it down into, here's what the formula is to do this over and over and over and over again. Because I know this is one of the better deals that you've had close in the past couple months, just in terms of what your total net on it's going to be. With $10,000 out, you're making $50,000 is insane. What's the formula here? If you were to step-by-step break this down.
Let me say one more thing. Anyone that listens consistently has heard me talk about some changes in how I'm doing the business and just some realizations of the availability of debt in land. And so in reality, I just pulled what I needed out of pocket from my line of credit. That's at 8% interest. So not only is there an interest arbitrage, but I'm only pulling just over 10,000. So in time, once you're able to do that, when you have assets, you can get business lines of credit, you can get investment property lines of credit. I have none of my own money in it, right? And so I'll pay that off, I'm sure, next closing or next month or two. But let me answer your question. So there's a number of big picture points I want to make here that all answer your question. I think first and foremost, direct mail. I mean, it has not stopped. We have gotten quite a few really solid deals here in the last couple months. They've almost all come from direct mail. that has continued to be productive. And it's only productive because we don't send crappy generic, Pebble templates or templates that you find online. They're very effectively branded. We have that back end of people Google us and they see our pictures of houses we're building. They see, tons of Google 5-star reviews, Better Business Bureau, Trustpilot, right? So having a strong online presence complements the direct mail. And so we're continuing to get more great deals because of that. Along with that, skilled salespeople. You've got to have confident, skilled salespeople, whether it's yourself or your acquisition manager. And so we do an enormous amount of call review. We're listening to the calls and going over it with the guys and trying to get better. And so if you're newer and you're not very good at the sales training from someone reputable is something that's worth investing in. I'll pause there. It looked like you want to say something.
Yeah, I just want to hammer the first half of that sentence home of if it's yourself. Because if you're trying to build a business it's a sales business at the end of the day. And if you are incapable of being decent at sales, building this business might not be right for you. And I think that's something that I'm realizing more and more of, like, if you're just totally useless as a salesperson, this is not the right business for you. You can be involved in this business as an investor or an operator in some capacity, but like in terms of you owning and managing a business that is 99.9% sales related, this is not your business.
Yeah, no, that's absolutely correct. And I think anybody can learn it, but you have to have the willingness to do so and just be willing to talk to people and have hard conversations. Now, a couple more points. I think we would have sat quite a while longer or sold much lower if seller financing wasn't something I was able to offer. So I think that was really key here. And, it depends where you are. When I started this business, I was doing almost all infill and builders were building on them right away. And it really wasn't a good product to offer seller financing on because they wanted to build now. And so they were buying for cash or with loans they're getting from the bank for construction. And so knowing your product, and if you're somewhere rural or somewhere where there's less money, you may need to offer seller financing to get good returns. I have a buddy out here who I see him doing a ton of business in areas where lots are sitting forever, but they're not sitting for him because he's offering terms on all of them. And so that's really important as well. And we'll talk about it more in a moment. We're going to replicate this over and over again out there, and we're offering terms on everything. And then finally, one more concept is just looking at the best way you can. What's the replacement cost? How do I buy this at a number where I don't know for sure what my upside is? You never do, but where there's pretty much guaranteed no downside. And I think we did that very effectively, where the cost of the land plus the improvements, there was no way we were going to lose. There was certainly a chance that we didn't make much money at all, depending on how some of these tests and inspections came back, but there was no way we were going to lose. And so, like you said in our last podcast, really focusing on deals where you're as confident as you can be that there is no possible way to lose. The intrinsic value, we're buying this below replacement cost, I think is really crucial.
Yeah. I mean, that's a big one. And I think it's hit a point for both of us where we've done so much volume over the years. Some big deals that have gone well, some big deals that haven't gone well. And it's the only bets that I'm willing to make are ones where I can't lose on anymore.
Yeah.
And I think that for really moving forward, having the broker piece to make an extra 20, 30K a month, it's making me really rethink this business to actually create like an actual land investing business instead of like the pure land flipping model, where I hate being in a position, especially whenever it's a financed deal, that I don't feel at liberty to take an owner finance deal or to sell on terms, because I have to cash out a person, and it might be, hundreds of thousands to cash out. And I think in the future for both of us, we're still having money partners, and we're still, letting a lot of these people take a lot of the upside of the deal, whenever they're the ones putting in all the capital. But I think that for us, to me, I look at this deal that you did, Dan, of like, okay, we're both operating in this market, or, around this market. And it's where the rural subdivide comes in. If you buy at $1,000 an acre, you sell at $2,500 or $3,000 an acre, 10% down, 10, 11% interest, amortized up to, 20, 30 years. Yeah, you're not going to get your cash back right away. might take a couple years, but then for 15, 20 years, you're just in that infinite return period. And it's starting to think much longer term with the investment thesis of the business as we have so much other capital coming in from active income generating. So I think it's really creating a blend of the active passive aspect of this through effective owner financing. And I think one, to stay on my soapbox for a second, I think what Dan and I are also trying to do is we're only targeting land that people desire. We're not trying to do this like silly land flipping thing with the desert squares that no one, there's no value added. It's, screwing up the market a little bit. It's just weird. People want this land, and we're creating an affordable option for them to actually be able to live on the property. Because these are all notes and deeds of trust, right? Or land contracts.
Yeah. And
Deed of trust. So it's their property. We're just the bank.
Yeah, and I don't think there's anything wrong with contract for deed. It's just people have abused that method of sales, kind of along what you were alluding to there, by selling crap to people with no money and then just taking the crap back and selling more crap to more people that are clueless with no money. And I don't want to sell something that's worthless. It needs to be usable for what the buyer wants. There's nothing wrong with selling recreational land if your buyer knows that it's recreational and that they're not going to be building there and that's all they want, then that's fine. It's just, we both see, and I think many listeners that are in the land space have seen people selling crap that down the road, the buyer's going to realize, oh, I can't do what I want with this. And I think that is what the problem is. As long as they understand what they're buying and they're okay with, and that's what they want, then that's fine.
Yeah. No, I think it's just part of the ethics of this business is, our value add is taking inventory that's been off the market and putting it on the market. Sometimes we do improvements, sometimes we don't, but make sure the product that you're putting on the market is desirable, or you're just being transparent with it. I mean, there's legal reasons to do it, but also just like within the land business itself. It's cool. It's cool because people are really excited about a lot of the products we're offering. And being able to offer the owner financing makes it accessible to a lot more people, which, creates homeownership opportunity for more and more people in an affordable way. So, Dan, what else do you want to add? I feel like this was kind of a good overview of a, deal dissection of a really, really profitable deal for you.
Yeah. One just quick aside I got to make to your last point about owner financing. It's funny. There's a property I sold on terms in 2021 to a buyer, and she had reached out to me from like Craigslist or something. This was when I was doing a lot more myself. And I remember she ended up finding out what I bought it for after she bought it. And she's kind of mentioned that, oh, you got this so low, I overpaid. And it's so funny now, 4 years later, I would love that lot back. It is an absolute prime lot in Pueblo West, one of the few 1-acre multifamily lots with water and sewer. I would love to buy that back at the price I sold that to her at. And so it's funny. She called me the other day because she's almost paid it off. She's got like 3 payments left. So she was just asking me about that. And I kind of laughed. I'm like, oh man, I regret selling you this. I would love to own this so I could just build and keep something on this myself. So it's funny. It just kind of related to what Mason was saying about offering people opportunities. She did very well in that lot. She could flip that for a huge margin or have a very, very prime multifamily piece of land where there's very, very few available. So.
Yeah. I mean, and that right there of like, if you're doing deals in the right markets, it's okay because sometimes it might take longer for a deal to happen. And if you can put yourself in a really good financial position to where you can actually hold it of, this is more a speculative investment. I'm going to land bank just like a lot of people have. You just have more exit strategies whenever you're not crunched for cash in this business. And the way you don't become crunched for cash in this business is by doing really, really good deals like the one that we dissected today with Dan.
Yeah. Yeah. So to your whole question about how to do more of this, we are doing more of this. I'm buying a big piece a little bit north. I mentioned when we started that this one that I sold that we just dissected, I have another piece just down the street. Now that one had gone under contract to sell months ago, and the neighbors ran out with guns, scared the buyers off. Fun of rural America. Anyways, so we're still working on selling that one. We've cops ended up there, and I think the neighbors are subdued. And it actually looks like a friend of the buyer of the piece we just talked about is going to buy this other piece. So that one should sell. But all that to say, we've seen tremendous demand for these parcels. It's just the buyers need financing. Very few can come up with the down payment because I had been offering seller financing with like 40 or 50% down. I wasn't looking for offering low down payment financing. So I'm structuring this other piece. It's 640 acres. We're going to split it up into a bunch of 40s, sell them off on terms, 10 to 15, maybe 20% down, 10 to 20 year amortization, could be shorter. And I think that's going to do very, very well because of the terms.
I think so too. I mean, you know that I'm on the broker side doing 6 of those this week. And I think that there's just a huge buyer pool for the people that are offering owner financing on it.
Yep.
And good favorable owner financing because, I'll say it. I think you got lucky with like a pretty much 50%, down payment almost on this one. A lot of owner financing requires so much less money, especially, look at the demographic of who's buying it. And sometimes they'll have money, sometimes they don't. And if you can open up the buyer pool, it's something that we talk about a lot of, that's why Dan's done a tremendous amount of business in affordable markets is because the end buyer financing is not an issue. And it's kind of the same thing here of, end buyer financing is an issue, except for if you're doing, 10% down on, a piece of land that they're going to put in, probably well and septic and park their RV and live out there until they can afford to, build a manufactured home or build a stick built home or anything like that. But the strategy is solid. The simplicity of this is almost the exact same thing we've been saying since this podcast came out several years ago. Send direct mail, answer the phone, buy deals at a good discount in markets where there's buyers, and then offer, multiple exit strategies. But really have a focus right now on just tremendous upside. So without trying to repeat ourselves too much more, this is Mason McDonald and Dan Haberkos with the Big Picture Blueprint signing off.